Hello and welcome to my YouTube channel. I am Witty and today I'll be talking about fundamentals, how you can literally trade the news, understand fundamental in just five simple steps. Let's delve in, guys. So firstly, you need to understand what exactly is fundamental analysis in forex trading. Fundamental analysis is basically just a way to analyze the market. I mean, from the word analysis, it's a way to analyze the market using economic data and more or less economic performance. So basically, there are three types of analysis in the forex market, like we know. Technical analysis, which is the most popular, then fundamentals, which is the second most popular, and sentimental analysis. However, our focus today is fundamental analysis. So what are the things you need to know about fundamental analysis? So I'll be giving you a little breakdown of what exactly fundamental analysis is. And then if you stick with me, I'm going to be giving you 5 simple steps that I use to actually determine fundamental bias to a very large extent. And to a very large extent, I'm usually right, even though I do not like to trade the news. But I'm basically going to be sharing what exactly I do to basically understand fundamental bias and how you also can go ahead and do that. So firstly, you need to understand fundamental analysis requires, a lot of time and patience. It requires a lot of time and patience. And most importantly, it should not be a standalone approach to trading. What I mean is, you shouldn't look at understanding fundamentals as, once I know, okay, the dollar is bearish fundamentally, I go on my chart and I want to sell everything dollar. I assure you, if you do that, you will most likely lose money faster than before you even went ahead to understand what fundamentals is. So fundamentals does take time, unlike technical analysis. Fundamentals does take time to play out because actually fundamentals moves the market in the long haul. Technicals literally tell you when to enter, when to exit, but fundamentals gives you more or less the overall trend. So fundamentals is basically a longer term approach to understanding the market trend basically, and it involves understanding economic activities and, very importantly, political activities. And why is that? Because to a very large extent, economic activities are usually determined by the political drivers, who are more or less the government of the economy. It's the government that appoints the finance ministers and the like. So more or less everything in terms of fundamental analysis revolves around government policies, government appointments, government declarations, and the like. So you definitely need to understand the politics of a country, of a state, to actually trade fundamentals properly. And then one thing I need you to take away from this video, very importantly, now I'm going to list out 5 steps, chill, okay? But one thing I need you to understand is there's a difference between fundamentals and news, okay? Fundamentals is not news. Let it stick. Fundamentals is not news. They are two separate things. They are related, but they are two separate things. Now, how exactly are they related? Actually, news is basically just news events are basically just announcements of fundamental activities basically, whereas what we refer to as fundamentals exactly are those decisions, those government decisions, those government policies, those financial decisions, those economic data that actually cause the release of small data, which cause the release of small data announcements, which we then know as news events. So more or less, if I plant yam, right, and my yam begins to grow and I'm watering it, all of those activities from the moment I decided to plant yam is fundamentals. However, the news event will then occur as something like maybe WTFX harvest 100 tubers of yam in September. So that's basically it. So fundamentals is the overall picture, while news events is just little bits of announcements as extract of what the overall picture of what is happening in the overall picture. So we need to differentiate the two of them. So fundamentals is not news. News is just announcement of fundamental events. So it's better to actually understand the economic data, economic policy of a country. So when the data comes out, it doesn't even come out as a surprise to you. In fact, to a large extent, you even understand the data even before it is released, because you understand what is definitely going on. For instance, during the corona period, the US government actually printed out a lot of money and gave to their citizens. Obviously, where is that money coming from? That money would definitely cause a lot of inflation. So today, if you see news such as US inflation rises, you know obviously what caused it. So that is fundamentals versus news. However, for proper understanding of fundamentals, regardless of what currency you like to trade, so to properly understand fundamentals, you actually need to focus on and understand properly what the US dollar is doing, regardless of what currency you want to trade. Now, this is why most currencies are actually priced in US dollar. So the performance of US dollar to a very large extent determines the performance of so many other currencies. So your first approach to doing your analysis fundamentally will be to first understand what the US dollar is doing. Then from there you can approach other markets. And the four news events that you should focus mostly on, the four news events you should focus mostly on are: number one, NFP. NFP is non-farm payroll, and basically unemployment data. So anything unemployment data to a very large extent affects the forex market. So you should pay a lot of attention to unemployment news. The number two will be FOMC. You definitely need to understand when is FOMC coming out, what could be the likely returns. And I'm going to give you 5 steps as to how you can determine what the likely outcome of the news will even be on the chart. So just stick with me. And then you need to understand or you need to look out for core CPI news. CPI news does move market. And then anything on GDP, that is gross domestic product of any country, would likely move market. And generally, any news that affects the interest rate of a country, it could come in form of a speech or something, anything regarding interest rate, because interest rate is really what attracts and lays off investors and investments into an economy. So you should be very alert when it comes to any news pertaining to investment. Now, what are those 5 steps that Witty uses to determine the trend so I don't get caught off my bias fundamentally? Now, take this from me, right? I would not advise you trade before the news, okay? But if you understand fundamentals to a large extent, you can actually position yourself. For example, this week I was actually looking at buying US dollar ahead of the core CPI news that was released. And when it was released, we saw how US dollar kept on buying. Whereas on Thursday, that was yesterday, I was actually interested in selling Euro USD. That's still US dollar buy, even before the news by I think the news was released by 1:30. And one of my students asked me why I'm buying even before the news, and I said I don't think this news will move market. And guess what? When the news was released, I think market just moved barely, probably 15 pips, and continued the trend in my favor. So if you follow these steps I want to share with you, you will definitely be able to predict the outcome of the news the way I do it. So first of all, you need to understand. So step one, you need to understand what is the market trend. And when I say what is the market trend, I don't mean what is the market doing on anything below the 1 hour time frame. I mean, what is the market trend starting from daily, from 4 hour, from monthly, from weekly? What is the overall market trend on the higher time frame? Now, what I've noticed is 90% of the time, markets or news events usually come to complete the move in line with the overall trend bias on higher time frame. So to understand fundamental bias, you definitely need to understand what the market is doing on the 4 hour, the daily, the weekly. Basically on higher time frame, is the overall market trend bullish? If the overall market trend is bullish, then it's possible that ahead of the news, the market will have been selling, and then price will use the news to then move up. Secondly, you need to understand what day is the news going to be released. A news that will be released on at the beginning or at the end of the week might not really catch my attention. Now, this is why. If a news is going to be released on Monday, then it's very likely that that news will just be to create the first move of the week. and likely is that the move will be a counter trend move. That is the move that occurs after the news event or as a reaction to the news event would likely be a counter trend move. And then Tuesday, Wednesday, you could likely see the continuation of the overall trend for that week. If it's released on Friday, then it's also likely possible that it will just be for profit taking. And then say market had been selling. Okay, for instance, you look at the dollar pairs. They had all been buying this week. However, the dollar news that was released later by 3 p.m. on Friday, literally we saw dollars selling. So that is basically what Friday and Monday news does. It's usually a false move. On Friday, it's used for profit taking. On Monday, it's used to engineer liquidity ahead of the original trend for the week. But if the news is released on Tuesday, Wednesday, Thursday, then it could likely be to complete the trend or to continue the trend. If it's on Tuesday, perfect. If it's on Wednesday, very good. But on Thursday, it could also be a reversal, or it might not even have any effect. And another thing you need to understand is, to a very large extent, what is the market's move before the news? What is the mood of the market before the news? Now, this is why it's important. If the market is more or less ranging, or if the market is being slow before the move, before the news is announced, then you can be assured that it's very, very likely that the news event would cause a very volatile move in the market. So for instance, Monday, Tuesday, we saw the dollar was more or less buying, but the momentum was quite slow. So that gave me a lot of insights that very likely core CPI, which will be released on Tuesday. I think Tuesday's date was 13th. Core CPI, which will be released on Tuesday, would likely cause a volatile move in the market, and I was not wrong. So check what the market is doing a few hours before the news. If the market is ranging, then you can be rest assured that very likely the news event will cause a volatile move. However, if the market already had some volatility, for instance, Tuesday news event rather caused a lot of volatility in the market. So Wednesday news event, I didn't expect it to move market much. Thursday news event, I didn't expect it to do much either. But Friday, I knew Friday could possibly be for profits taken. So similarly, right, ahead of NFP, if you've had a volatile week before NFP news is released, most likely NFP will not have any effect. Same thing for FOMC, same thing for CPI. Literally, all the news events are like that. If market was already volatile before the news, then it's very likely you could just see the news maybe just spike up, spike down, and market will continue in the trend because the volatility has already happened. And to a large extent, that's because the market has its average daily range, average weekly range. Anyway, that's a topic for another day. And then, very importantly, you need to know what time is the news going to be released. Time of day matters a lot in planning your trade. If the news will be released in the morning, say during London session, then it's very, very likely that morning will be to spike up and eat a lot of stops, clear liquidity for the trend of the day. If the news will be released by, say, 3 p.m., then that means it's very possible you have a volatile London session. Now, remember, the market move is very important. So which means if you have a ranging London session, then that means the market makers are just holding the market ahead of the news, and then you can expect a volatile New York session. If it is going to be released maybe 1:30 New York session, then in most cases, I'll rather just wait for the news to be released, because it's very possible that they hold the market during London session to release it in New York session, early beginning of New York session. So those are basically the three criteria I consider. If it's in London session, I know it's most likely just going to be a false move, and then the trend starts. If it's around 1 o'clock, 1:30 New York session, then I know it's very possible they hold the market during London session. So I'd rather not trade London session. If it's going to be released around 3 p.m., 4 p.m., 7 p.m. New York session, then I know it's very likely that price could give me an earlier entry even in London session. However, into New York session, I wouldn't be trading that. So you need to understand the time. And lastly, you need to understand what is the news event. If it's a news event like maybe probably PPI, I might not really be interested in PPI. But the basic four news events that usually move the market the most, I already mentioned it earlier. That's NFP, FOMC, CPI, and GDP news or anything regarding to interest rates. So basically, what I do is ahead of the news for the week. In fact, I'll probably do a video on how exactly I frame my setups for the week and choose what pairs using the news. So basically, like I was explaining, why I do is ahead of the news, I check first of all what is the overall trend of the market. If it's bullish, then I'm expecting that likely to move. There will probably be a bearish retracement, and then the news will take price higher. Secondly, I want to know what day of the week is the news. If it's on Monday, I'm not interested. If it's on Friday, I'm not bothered. If it's on Tuesday, Wednesday, Thursday, I'm very, very interested. Lastly, I want to know, or rather, thirdly, I want to know what is the mood of the market ahead of the news. The market are volatile ahead of the news, then I know the news will likely not do anything. But if the market is ranging ahead of the news, then I know likely the news will likely move market. And then I want to know what time is the news released. That time of the day when the news is released to a large extent determines what session I'll be trading that day. And lastly, what exactly is the news event? If it's not something that would likely move market, one easy way you can filter this thing is on Forex Factory, focus on the red news. The orange news, the yellow news, they rarely do much. And very importantly, if there's a bank holiday, I'd rather just stay off that pair completely, because most of the time during a bank holiday, you could have the market just ranging. And one thing I really need you to understand is volatility is usually hidden behind news. Volatility is usually hidden behind news. So basically, if you need more clarity, if you need more understanding, you could probably join my mentorship, okay? Or you're wanting to trade like a pro, wanting to do better, right? So the Profem Academy, you could very well join today, pick a package and join us. So what I basically teach is on the Profem Academy, you're basically going to learn the course, how I more or less trade towards managing institutional money, more or less how to manage large funds. If you're trading a prop firm, how you can meet your targets, how you can manage your trades, basically. So you're getting the course, the mentorship, and I also post trade signals and trade ideas for free. It all comes with the package on the prop firm academy. Alternatively, if you are just starting your forex career, you could very well take the WTFX Forex Trading Made Easy online course. That course is designed for those who are just starting out in trading. You could basically use that, or you could take the WTFX 50-50 trend continuation strategy. Basically, that's the simplest strategy you'll probably come across. It's also channeled for beginners. If you're interested in crypto, in fact, from the look of things, it's very likely that the crypto market will start going bullish really soon, because it's also likely we start seeing bearish US dollar. It's too early to call the yearly reversal. However, we're going into the month of September, and that is the last quarter of the year. So it's very likely the market moves in circles. So it's very likely we see the last circle of the year being a bearish dollar. And if dollar is bearish, most of the time it moves Bitcoin bullish. We also have the WTFX Crypto Trading Made Easy online course for those who are just starting out crypto trading, and it's more or less an advanced analysis class where you can understand how to better approach the crypto market. So lastly guys, I need you to understand this, okay? Fundamentals determines the overall bias of the market, and to a very large extent, fundamentals is usually very right. However, fundamentals should not be used for entry, okay? Liquidity moves the market immediately. Technical analysis tells you when to get in, when to exit. However, fundamental analysis gives you the overall trend. Remember to join me on the Path to Profit podcast hosted by 7 p.m. GMT plus 1 on my Telegram channel every Monday. The link is just in the description box. Subscribe to my YouTube channel. Join my Telegram channel likewise, where I also do share free trade ideas and also my weekly Forex forecast. That's literally easy money every week, my weekly forex forecast. So thank you so much. Have a great day.